Transfer pricing in divisionalized companies. Now, first of all, what is transfer pricing? Transfer pricing. Because we all know the meaning of divisionalized companies from the word divisions. Companies with divisions. That's the meaning of divisionalized companies. But what is transfer pricing? Now, transfer pricing refers to the prices at which goods or services or intangible assets are exchanged between related entities within a company, which could be a multinational enterprise, related entities. It refers to the prices. Transfer pricing refers to the prices of goods or services, prices at which goods or services are exchanged between related entities. And these related entities could be subsidiaries, branches, departments, divisions located in different countries or even within the same country, but operating as separate profit centers. You understand? You may have a company with different divisions, and the divisions are semi-autonomous. They could be profit centers. Okay? So these divisions of the same entity may exchange goods or services at a certain price. It is this price at which goods or services are exchanged between entities within a group or a company that we are referring to as transfer pricing. And transfer pricing becomes crucial, especially in divisionalized companies. Divisionalized companies. It becomes crucial, especially in divisionalized companies where various divisions operate semi-autonomously, or where they operate as semi-autonomous profit centers within large organizations. And each division is often evaluated based on its profitability, which creates a scenario where transfer prices can significantly impact divisional performance and the overall company performance. Is that clear, candidates? Transfer pricing. Are you getting that picture? Do you see the picture? Imagine there is a multinational company with divisions. They could be within the same country or even outside the country. Okay? And these divisions are profit centers. That means they sell goods and services, they make profit. They incur expenses, they generate profit, they receive money as acting semi-autonomously. And these divisions may buy or sell goods amongst themselves. So the prices at which goods or services exchange between these divisionalized entities is what we are referring to as transfer pricing. Do you understand? Tell me 5 challenges. What do you think are the challenges of transfer pricing? What challenges are likely to be experienced? Now that you've understood the concept, give me 5 challenges of transfer pricing. Michael, what do you think? Challenges, give me just 2 or 3 challenges of transfer pricing. I'm waiting for you. Michael says maybe tax-related challenges. Maybe tax-related challenges. Maybe. That's a good point, Michael. Just delete maybe. Tax-related challenges is a strong point. You are thinking correctly. Don't doubt your mind anymore, Michael. Tax-related challenges. Tax-related challenges. Tax-related challenges. Tax-related challenges or tax implications. There are tax implications. Tax-related challenges or just tax implications. Tax implications. In multinational companies, for instance, transfer pricing can have significant tax implications, because by manipulating transfer prices, companies may attempt to shift profits to low tax jurisdictions, which may lead to tax scrutiny and penalties. Very good, Michael. Tax-related challenges. Give me another one. This is what we call goal congruence. Goal congruence. Goal congruence. Goal congruence. This is a central challenge. A central challenge, candidates, is ensuring that transfer prices promote goal congruence between the divisions and the overall company. Because if transfer prices are set too high, the buying division might see decreased profits. The buying division may see reduced profits, while the selling division might appear overly successful. On the other hand, if transfer prices are set too low, the selling division might suffer and the buying division might benefit unfairly, which makes goal congruence a challenge. Another challenge is related to performance evaluation. Performance evaluation. Performance evaluation. Transfer prices, candidates, directly influence the reported profits of each division. Directly influence. Because we know prices are a function of profit. Profits are determined by prices. So transfer prices directly influence the reported profits of each division. And it's essential to ensure that these prices directly lead to fair performance evaluations that reflect the true contributions of each division. Because if a price is set unfairly high, when evaluating unfairly high. When evaluating, then a division that is receiving high profits may be evaluated as a high performer, yet is just a question of function of, or the cost could just be the transfer prices, right? There's another challenge related to motivation. Motivation. What do I mean? Now, transfer prices can affect the motivation of divisional managers. These prices can do what? Can affect the motivation, morale of the division managers. Because if managers perceive the system as unfair or detrimental to their division's performance, that can lead to conflicts and reduced cooperation. You understand? Yes. So there are many other challenges, but these are some of the key challenges. Now, as management accountants, I know you love calculations, so I'm not going to waste time talking, because I know you are expecting, you want to use your calculators. Okay, you want to make use of your calculators. I know that is your expectation, but I want to remind you what we defined of our definition of strategic management accounting. Apart from just the calculations, you need to understand why certain decisions are made, because the information that you provide to management is used for strategic planning. So there has to be understanding of the rationale behind the calculations or the computations. You understand? So here, candidates, we have domestic and international transfer pricing as a subtopic under divisionalized companies. All right. So let me maybe say something about international transfer pricing before we look at an illustration. International transfer pricing refers to the prices at which goods or services are exchanged between related entities located in different countries. Okay? Different entities of a company or a multinational company located in different countries. Do you understand? That is international transfer pricing. Prices at which goods or services are exchanged between related entities of a multinational located in different countries. Do you understand? That's the meaning of international transfer pricing. And those of you who plan to study more on international pricing, you may think of referring to the OECD regulations, where you will learn more about methods that are used in international transfer pricing. The OECD. That is the Organization for Economic Cooperation and Development. Has what we call transfer pricing guidelines that provide a framework for determining what we call the arm's length prices. Arm's length prices. The OECD has guidelines that provide a framework for determining arm's length prices. Let me maybe highlight some of the methods, just a few. Let me not assume. Let me international transfer pricing. I've just said that the OECD has guidelines, transfer pricing guidelines, the Organization for Economic Cooperation and Development. Organization for Economic Cooperation and Development has issued guidelines on international transfer pricing. And there are various methods under these guidelines. Okay? There are various methods. I want to highlight just a few of them, like the comparable and controlled price. One, comparable and controlled price. Comparable and controlled price. Comparable and controlled price method. This method compares the price that is charged that is charged in a controlled transaction to the price charged in a comparable transaction between unrelated parties. So first of all, you understand transfer pricing. International transfer pricing, I've defined it as the price at which goods or services are exchanged between related entities. Okay, related. There is the price between related entities. Now, when setting price between related entities, the multinational company may use the comparable and controlled price method. And this method compares the price charged in a controlled transaction to the price charged in a comparable transaction between unrelated parties. You understand? So if there is a price between these related parties, the company may compare the prices that are charged outside the parties. And this is the most reliable method when comparable data is available. There's that price between the related parties, and there's the price between unrelated parties. That's one method under the OECD transfer pricing methods. Two, we have the resale pricing method. Resale pricing method. Resale pricing method. Resale pricing method. Now this method, resale pricing method, subtracts or reduces, or let me use the word subtract. The method subtracts an appropriate gross margin from the resale price of the goods or services to arrive at the transfer price. It subtracts. So if the price is, say, 100, inclusive of a margin of 20 shillings, resale pricing method. So this method, if the price is 100, the method subtracts the profit margin. Subtract the profit margin. Subtracts the margin. Subtracts an appropriate gross profit from the resale price of the goods or services at which transfer pricing, okay, arrived and is used to arrive at the transfer price. And this price candidate is suitable for resellers or even distributors with limited functions. Cost plus method. Cost plus method. Cost plus method. This one, you recall, we discussed it earlier on. Cost plus method. This one simply adds an appropriate markup to the cost of producing the goods or services, and it's applicable when one entity provides routine manufacturing or even services to another entity. Cost plus method. Transactional. What is the other name? Transactional net margin. Yes. Transactional net margin method. Transactional net margin method. Transactional net margin method. This one examines the net profit margin of one of the entities involved in the controlled transaction, and then compares it to the net profit margins of comparable and controllable transactions, and is used when comparable transactions are not really available. Profit split method, and this is the last one. Profit split method. Profit split method. This one splits combined profits from the controlled transactions between the related parties or entities based on their relative contributions. And this one, candidates where profits are split, is appropriate in situations where there is what we call highly integrated operations. Highly integrated operations where separate entity profitability is difficult to determine. So the margins are, the profits are split between the transaction or entities that transact. I thought I should mention something on the OECD because this is the best practice, and if you want to study more on international transfer pricing, this is a good source. The Organization of Economic Cooperation and Development Transfer Pricing Guidelines. International transfer pricing. Those who will be doing exams, please pay attention to what we are discussing. Pay attention to this theory part of the topic. Now, illustration. PM Limited operates two divisions, namely X and Y. Division X produces an intermediate product M that has no external market. Now, an intermediate product, candidates, is an input in the production process of another good. You can see Division X produces such a product which is used as an input in Division Y. Intermediate essentially means a partially finished product that still needs further processing. You understand? And maybe that's why we read it has no external market. It's an incomplete, it's a raw product. So the product is then transferred to Division Y, where it is used as an input in the production of product N. Do you understand that? There are two divisions. One division produces product M, which is an intermediate product, an incomplete product, and that is partially finished, a product that is partially finished. That partially finished product is an input in that is used in production product N. So we have quantities on one column of that table and selling price. So the product is then transferred to Division Y, where it is used as an input. So we have prices. Quantities 1,000, 2,000, 3,000, 4,000, 5,000, 6,000, and the selling prices are 150, 140, 130, 120, 110, and 100 respectively. Divisional costs are as shown in the table below. So variable cost per unit, Division X 13, Division Y 7. Fixed costs attributable to the product, Division X 50,000, product Y 70,000. Additional information number 1. Product N is transferred to Division Y at 25 shillings per unit. Number 2, assume that product of both M and N is in batches of 1,000 units. Assume that production of both M and N is in batches of 1,000 units. Required. Roman 1, the profit maximization output level for Division X at the current transfer price. Roman 2, the optimal output level for the overall company given that the variable cost of Division X is 5 shillings per unit. The profit maximizing output level. Profit maximizing output level. This is an illustration. Solution. Roman 1. Profit maximizing level. It is profit maximizing level, profit maximizing output level for Division X. And there are various levels. We have a column for quantity, and we have 1,000, 2,000, 3,000, 4,000, 5,000, and 6,000. These are levels. For us to determine the profit maximizing output level for Division X, we are going to calculate the contribution at each level, and the contribution that will be the highest, that is the level. You understand? So these are levels. We are going to now compute contribution at each level. And we are given the transfer price. So contribution is the price minus variable cost. So what is the transfer price? From the question. Additional information number 1. Product N is transferred to Division Y at 25 shillings per unit. It's 25 shillings, 25 shillings, 25 shillings, 25 shillings, 25 shillings, 25 shillings. So remember, the formula or the approach is to determine the contribution for each level. So to calculate the contribution, we need to subtract the variable cost from the price. That will give us the contribution at each level. Do you understand, candidates? So what is the variable cost? Product X. You can see from the question, division costs are shown in the table. Variable cost per unit is 13 shillings. Variable cost, 13 shillings. That's the variable cost. So what will be the contribution? And this is contribution per unit. What will be the contribution? Deduct variable cost from the price. That will give us the contribution. The first one, 25 minus 13. Is it 12? It's 12 shillings, 12 shillings, 12 shillings, 12 shillings, 12 shillings, 12 shillings. Are you following, Sarah? That is the contribution per unit. Contribution per unit. Contribution per unit. So get the total contribution. Total contribution. What will be the total contribution? We multiply the contribution per unit by the number of units. Contribution per unit by the number of units. Contribution per unit by the number of units, the quantities. That will give us the total contribution at each level. So the first one is how much? 12. 12 times 1,000 is 12,000, is it not? 24,000, 36,000, 36. 12 times 4,000, 48. Then we have 12 times 5. This is 72. 12 times 6. That is 12 times 5. This should be 60. 60. This is 60. Then 12 times 6, 72. At what level is profit maximized? At what level is profit maximized? The profit is maximized at the level at which contribution is highest. Between all these, at what level is contribution the highest? At what level? It must be this level. So what is the answer? The answer is the profit maximizing output level. The profit maximizing output level of division X is 6,000. This is the level. So we are going to calculate the company's profit at each level, given that there is that variation of the variable cost of division X, the optimal output level. Optimal output level. So there are 6 levels. So we need to calculate the profit at each level. Okay. So first of all, we'll have the quantities. Let me begin here. There is 6,000, 5,000, 4,000, 3,000, 000. Let me take it again. Let me take it again. Yes, let me take it again. Space management. 6,000, 5,000, 4,000, 3,000, 2,000, 1,000. So these are quantities, which represents the labels. Okay. Then we have the selling prices. So candidates, don't forget, we want to determine the profit at each level. To determine the profit at each level, we are going to first calculate the selling price. We are going to determine the selling price. We deduct the variable cost. We deduct the fixed cost. That will give us a profit. We know the quantities at each level. We know the selling price per unit. The selling price per unit is given in the question: 150, 140, 150, 140. We have 130 shillings, 120 shillings, 110 shillings, and 100 shillings per unit. Now, with this information, candidates, we can determine the selling price, the total selling price. Because the quantities we have, selling price per unit we have, so the selling price will be equal to the quantities times the selling price per unit. Can I use your calculators? 1,000. This is just 150,000. 2,000 times 140. This should be 14 times 2. 14 times 2. Is it 28,000? 390,000. Then you have 4,000 times 120. This is 480,000. 5,000 times 110 is 550,000. Then lastly, 6,000 times 100 60,000. 600,000. So 150,000, 280,000, 390,000, 480,000, 550,000. That is the selling price. Variable cost. Look at the question again. We read that the optimal output level for the overall company. We are now calculating for the overall company. The optimal level for the overall company, given that the variable cost of division X is 5 units. Initially, the variable cost for division X was 13, and now we need to recalculate after reducing it from 13 to 5 shillings per unit. So the variable cost for division X is 5 shillings per unit. And the variable cost for division Y is 7. And given that you are calculating the output level for the overall company, the variable cost will be 5 for division X plus Y, which is 7, and the total is 12. So the variable cost there is going to be 12 shillings. 12 shillings. 12 shillings. That will be the variable cost per unit for the overall. Because here we are calculating the optimal output for the overall. That means both department X and Y. So variable cost is 12 shillings. But let me just have a working here, Candice, so that you can follow through. You can have workings. Let me have a working. Let me have a working for the total contribution. Okay, so we had the levels, the selling price, and we've seen that the total variable cost, the variable cost, we have it, is 12 shillings. The variable cost is 12 shillings. Let me begin with the levels. Quantity. Let me have the quantity. 1,000, 2,000, 3,000, 4,000, 5,000, 6,000. Do you want to take a shortcut? Though we can have it there, but let's show the workings. So you want to determine the variable cost at each level. We know at 1,000, the selling price is 150. At 1,000, the selling price is 150. Okay? The variable cost we've seen for the overall is 12. So 150 shillings minus 12 shillings is equal to the contribution per unit. Selling price per unit is 150. Variable cost per unit is 12 shillings. The difference is the contribution per unit. Contribution per unit. So contribution per unit. Contribution per unit. So we had the variable cost contribution per unit. So contribution per unit is the 150 minus 12. This is just 138. Then 140 minus 12. That gives me how much? That is 140 minus 12. 140 minus 12 is just 128. Then 130 minus 12. At that level, 130 minus 12 is equal to 118. That's 130 minus 12. Then 120 minus 12. Contribution per unit at the fourth level. At the fourth level, it's 108. 110 minus 12 candidates is equal to 98. Then 100 minus 12 is 88. 88. So that is the contribution per unit and the number of units. So then what will be the total contribution? Total contribution, we get these totals. So this will be equal to 138 Then you have 2,000 times 128,000. 3,000 times 118, because Sarah is not cooperating. 4,000 times 108, 1,000 times 98, 490. If you are joining this class, candidates, it's important for you to participate. 528. Sarah says 528. So these are contributions, total contributions. Because the working is there. 138, 256, 354, 432, 490, 528. So we have it. Those are contributions. Those are the contributions, Sarah. Contributions, we've done the contributions, companies, contributions. Then from the contributions, can you see from the question, go back to the question, do we have the fixed costs? Yes, less fixed costs. Fixed cost, we have the fixed cost. What is the fixed cost? The fixed cost from the question is 120,000 and is constant at each level. Fixed cost 120,000, 120,000, 120,000, 120,000, 120,000. Deduct fixed costs, give me the profit. Overall profit at each level. What is the profit at each level? Just 18. Then 256 minus 120. 256 minus 120. This is it 136? Please confirm. Then you have 354 minus 120. 354 minus 120. Is it 234? 120, this is for 432 minus 120. This should be 312. Is it 312? It's 213. 190 minus 120. This should be 350. 370. Is it 370? 370. Then 528 minus 120, this is 804. 408. 804. So those are the profits. And what is the question? What is the question? We've done the profits. So the question is the optimal output level. The optimal output level for the overall company, given that the variable cost of division X is 5 shillings per unit. When the variable cost for division X reduces to 5 shillings per unit, what is the optimal output level? The optimal level to maximize profits, we compare the profits at each level. This is 180, 136,000, 234,000, 312,000, 370. So the optimal level is 408. The optimal profit. Is it optimal profit? What are the words? The optimal profit. Is it optimal profit? The question says the optimal output level. The optimal level to maximize profit. The output level the optimal output level, let me say the optimal output level, let me say the optimal output level to maximize profit is this level, where profit is at maximum, is 6,000. So if there's no question, we will bring the lesson to an end. I hope to meet you in our next session, where we continue to answer. We'll continue with the topic pricing decisions. Hopefully, in our next lesson, we'll complete the topic on pricing decisions. Bye-bye.